Welcome to the Business of Hotels podcast, examining the issues mattering most to owners and investors. And now, your hosts, Gary and Glenn.
Hey everybody, welcome back to the Business of Hotels podcast with me, your co-host Glenn Haussman, and
Gary Isenberg.
How are you, sir?
I am fantastic. Had a great conference. I actually didn't see you much. What have you been doing the last 2 days?
I've been actually, every time I thought I'd see you, you kind of like ducked around a corner. You know?
I was hiding from you. I was a little nervous about doing this podcast. I wanted to make sure it was at the end of the conference and not in the beginning.
Well, being that the topic of today's conference is what happened at the Hunter Hotels Investment Conference, doing it at the beginning would have been a little unusual.
So I got to share a funny story that happened last night. Have you ever been to Johnny's Hideaway?
I've never even heard of Johnny's Hideaway, but I'm already liking what I think I'm going to hear.
So Johnny's Hideaway is an interesting little local kind of bar, and a lot of the people from Hunter go to this bar at night and so forth. And there's a gentleman, do you know Bo Williams by any chance of Mission Capital? Mm-hmm. Yeah, great guy, right? But I think Bo might have stayed there a little too late. Because he's staying.
That sounds like my last 20 years.
He's staying in the same hotel that I'm staying in. I got him the room there. Mm-hmm. And he called me this morning. He's like, Gary, he goes, what's with this hotel you put me in?
Right.
I go, what are you talking about, Bo? He goes, I can't find my way out of the room. I go, Bo, what are you talking about? And he goes, there's 3 doors. Right. He goes, I open the first door, it's the bathroom.
Right.
He goes, I open the second door, it's a closet.
Right.
He goes, the third door has a do not disturb sign on it. You're welcome, Bo. I told you I was going to talk about you on this podcast.
All right, so tell me a little bit about Johnny's Hideaway. I think that's the most important news to come out of the Hunter Conference.
I think we'll keep that out of the podcast, as I don't want to get myself in any trouble. No, but seriously, it's just like kind of a local, older crowd kind of bar. It's a great place to go and fun, have drinks. And
it's nice to actually go into places where I could feel comfortable.
You actually feel young there.
Right, which is not how I feel at the Hunter Conference, where I always feel a little bit uncomfortable dealing with all of these incredible industry professionals that come here. And this is, I think, its 31st year. It's amazing to see.
You know what I love about this conference, Glenn, is that all the other conferences, like Alice and NYU and so forth, it's 3,500 attendees or something like that. And Alice now probably has 3,500 out in the LA Live that never even registered.
Absolutely.
So it becomes very overwhelming, if you would. Here, it's still a lot of people. 1,800, I heard, is their attendance. Mm-hmm. Record numbers.
Wow,
this
I
year.
had not heard that, but not surprised.
But it still feels very intimate. You can sit down, have a conversation. You're not searching everywhere for a seat out in the lobby and so forth. It's just a very great place to have business, and it's moved on to kind of an institutional level as well.
I agree, and it's kind of found that perfect balance, I would say. Now, I'm not going to besmirch any of the other conferences. They're absolutely fantastic, and we all get a lot out of them. But there's something different. There's something unique, something a little bit more special about this one that allows you to connect better with people.
And also, I think it's definitely a little bit more regionally based than it is kind of on a national level, which kind of makes it smaller. But, it's an interesting conference, interesting time that we live in right now and where we are in the cycle. And I hear all these comments and so forth, throughout the conference. And again, the words that keep coming up is cautious optimism.
So tell me about this cautious optimism, because I remember that from back in the day. I don't remember which politician said it, but it struck a chord with me. And that seems to be kind of the pattern that we've been in here in the business for years and years and years. It's like, when is it going to end? It's never going to end.
Today the speaker at lunch, spoke about the cycles, and he was saying how, typically they're a 7-year cycle, and we're a little long in the tooth of this cycle because we're almost 10 years into this cycle. So I think because of it, everyone's worried that the shoe's going to drop, right? And something's going to happen that's going to change that. But meanwhile, all the fundamentals are great. RevPAR growth, we're expecting RevPAR growth, still expecting GDP growth. I mean, there's lots of things going on that the economy's doing well. So that's what bringing this cautious optimism, and I think we're moving to more caution and less optimism as we move through the year, because people are concerned that the shoe is going to drop.
But if people have been concerned that the shoe is going to drop every single year, we've been at this conference for the last 4 or 5 years, why is this time different in your opinion?
I think what's changing, speaking to different purchasers, acquisitions, developers, and so forth in the hotel space, different owners, definitely taking more of a rifle approach to acquisitions. Really targeting a very specific, whether it's brands, a specific market, chain scale, a specific location in a city or so forth, and really targeting what that acquisition is going to be. So no more of just like, hey, I got to do a deal for the sake of doing a deal, and kind of a shotgun approach. It's more very targeted. very systematic. Also, things are trading. What's interesting, I was talking to a broker today, and he was saying that what's selling right now is the big four brands,
right,
in kind of that mid-scale select service,
which has been the bread and butter of the industry for years.
For years. However, though, they're selling at a 9.5, 10 cap before renovations.
Okay. Let's break that down, because I'm not a financial guy. We all know this. I'm more the other.
Our listeners hopefully are.
Yeah, right. But for us plebeians that aren't fully, inculcated into this kind of universe, what does that mean, and why is that either good or bad?
Okay. So cap rates are basically if you look at what the property is generating on a cash flow basis, divided by the purchase price.
Right.
So it's the return that someone would be looking for, right, on that acquisition. So if something, I'm going to use round numbers because 10% works easy for me.
Yeah.
8.5, 7 doesn't work so well.
Right. So for illustrative purposes, we're just using a whole number.
So for 10%, if you had $5 million in cash flow, the purchase price would be $5 million divided by 10% would get you to $50 million.
Right.
Or $50 million times 10% would give you a $5 million return.
Why is the formula in that particular way in order to determine selling price?
So people look at, when they buy a hotel, of what the return they would expect on that investment. Now, a hotel typically is going to be expected to have a higher return than resi or commercial real estate because there's greater risk. What's interesting is what's happening, though, is this fact that what's selling right now is a little bit higher cap rate, when I'm saying 9.5, 10, before renovations, and then after renovations is going in at an 8. Where a couple years ago things were selling more at 8, 8.5, and after renovations might have been a 7.
Right.
So the expectation is they're expecting a little bit greater return because it's starting to get a little bit more riskier.
Okay,
of an investment.
But why is it becoming a little bit more risky in investment, at your opinion, and anecdotally what you've heard here?
I think what's happening, we're seeing a little bit of rise in the cap rate. Not huge numbers. We're talking maybe 250 basis points or to 500 basis points, if that. But I think what you're seeing is that the risk is because of the extension of the cautiousness, right? Cautious optimism. The question is it 50-50, or are we 75% cautious and 25%?
So it's more psychological than fundamental.
I would say yes.
Yes.
So it's more just of how people are looking at it. And what the broker was saying, this is what's moving. So it's not that someone's pricing it that way. He's saying that at that kind of 9.5 to 10 cap before PIP, and then being like 8.5 after the PIP renovations, that's what he's seeing things move at. That's where it seems the buyer is willing to pay. It's not necessarily a mathematical science. But it's interesting, where we are in the cycle is just, again, this kind of wait and see. Let's see where we get through. There's definitely money on the street. People are still doing deals, still developing. But I think what they're looking at is a smaller pool of what they were looking at a few years ago.
A smaller pool of development?
Smaller pool of what they would be willing to invest in or develop.
So if you're feeling really bullish and you say, the business is going to be crazy cuckoo positive for the 5 years, maybe I'll pay a little bit more because I really want this asset. I think that I could get even more upside out of this asset. And since we're in such a good place, it's all right, I'll make that investment.
Yeah, I think it's looking at the right markets, right? For example, certain markets are just Charleston, for example, hot markets, and not necessarily in those markets, but a lot of people are also looking at ancillary markets to markets like that, buying the right brand, buying the right opportunity. There's still a look for value add opportunities, there's rebranding and things of that nature. But I think overall, from the outcome of the conference, what I got is it's still this kind of cautious optimism. Yeah. People are still willing to do deals. They're just being a little bit more pickier.
That's fair. Now, I spoke to 2 or 3 different brokers, and they said transaction volume seemed to be going up. Is that what you've been hearing?
I think there's lots of transactions happening, but it's all depending. I think the fundamentals are changing a little dynamically, is what I've heard.
Right.
I hear there's a lot on the market. There's a lot coming to market, and there's a lot of. I also heard from brokers there's a lot of kind of maybe tire kicking, so to speak, like what can I get for this asset kind of thing.
Yeah, one of the things that I've been hearing is a lot of this money now is starting to come from new places, right? Not the traditional hotel investor. So how, maybe you're seeing it differently. You're much more in deep, but what does that mean to the overall selling price of hotels if what I'm hearing you believe to be true?
The capital of where it's coming from.
Right.
A lot of that you have different international capital streams coming in and so forth and so on. What concerns me is typically when we start to see buyers or developers of hotels that are what I call newbies to the space.
That they don't know what they should pay, right?
The kind of non-traditional buyers and so forth. And, maybe they invested in commercial real estate and now all of a sudden they think hotels are hot and sexy and they want to buy some because they hear the returns are so great. Yeah. That, in my experience, has always indicated that the downturn is near.
And I've seen that in previous downturns, because sadly I've been around now for a couple of them. When it always seems that they come in at the top of the market.
Right, but what's fundamentally different, I think, right now is that all the indicators, all the fundamentals are good. We're seeing good growth. We're still seeing positive RevPAR growth, even though supply is slightly growing. We're still seeing GDP growth. We're seeing the economy tank along. The stock market's doing really well. Mm-hmm. The Fed has kind of tamed down the interest rate hikes and so forth. So all indications are the economy's chugging along. So that's the optimism, right? The cautiousness sets in as like the cycle's getting long in the tooth.
Right.
So we all know that everything goes up must end. So that's where the cautiousism.
I don't know. I've been very bullish on a downturn for a while now, but now I'm starting to really wonder: have we just reset?
Well, that's what I was going to go next. Right? Or have we just has the cycle somehow adjusted already, and we never experienced it? Blipped so minorly that we never saw it.
Yeah, I'm like hearing new normal now, which I always think is a weird kind of phrase. I guess because it was invented after the 9/11 incidents happened. But is this heading towards a new normal? Have we really shifted from a materialistic to an experiential society where everybody just wants to travel a lot more?
Well, I think a lot of that is happening. And I think also, we were always concerned of all these different things that might have impacted travel, right?
Right.
And I think people are continuing to travel. And I think what's happening as the world becomes smaller, places are becoming more accessible. So people are traveling more.
Right. Yeah, I mean, you see that with the Chinese, for example, right? How hundreds of millions of them are now in the middle class. They have more people in the middle class than we have citizens in the United States.
Isn't that crazy?
Crazy. And they're all looking to
travel. Right.
And Americans are traveling in numbers that I've never seen before. I just think about when I was a kid, the traveling sports team went from my neighborhood of
from Smithtown to Huntington.
Right, yeah, exactly. That was the traveling team. Now it's like every single weekend these teams are in other states.
Right. And there's all sorts of sports complexes popping up across the country and hotels that house these students, these kids, and so forth. I mean, weekend business on this kind of travel teams and sports and Smurf business is phenomenal for these select service hotels in these suburban markets. We're seeing a lot of different growth of different types of business, which I think is propelling it and propelling the development. And propelling all the new brands.
Right.
Because let's face it, although I was really happy to hear there was no new brands announced at this conference, or was there? Did I miss something?
You probably did. I mean, that would make the first week, I think, in the last 4 years, a new brand hasn't been introduced.
Yeah, and that's kind of a crazy conversation to itself is what's happening with all the brands. But the reason that all these brands are happening is because I believe, because we are long in the cycle.
Right.
The demand is still there. And what I mean by the demand is still there is it's still feasible to build a hotel, right? As long as it's feasible to build a hotel, Marriott's going to run out of brands. And they're going to have to create another brand because there's 35 brands of their brands on that street corner already.
Right.
And if it's still feasible to build another hotel on that street corner, the only way they can put their flag on it is to develop another brand.
That's right, because of areas of protection, et cetera, et cetera.
Correct.
And if they don't develop that brand and offer
someone else will.
Right, because they're like, oh, we have this great franchisee, let's give them another opportunity to develop another product instead of sending them to another company.
I was talking to a non-Marriott brand today. One that's trying to grow their product, if you would,
right.
and they're launching brands and developing hotels, and they were working with a developer, and the developer's like, "Why are you going to build a hotel in my market?" And the brand says to him, "Because you've built 4 other brands and didn't build our brand. Now it's time for us to build a brand." And that's what's happening. Is that if the market can demand a hotel and has can support it, and it's feasible to support and have that hotel come in, then new brands will happen. Because if IHG's running out of brands and they can't put another brand on the street corner, they'll open a new brand. That's what's happening. It's the only way they grow their inventory.
That's right, and somebody's got to feed those poor franchise people. I feel so sorry for them. Actually, I don't. They're doing a whole lot better these days. All right, when we come back from this commercial break, I've got a great topic that I want to talk about. It's getting a lot more expensive out there, people, and I'm going to tell you why. So stick around.
Thanks. Hi, this is Gary Isenberg with LW Hospitality Advisors, president of their asset management division, where we bridge the gap between hotel ownership and management. View us at our website at www.lwhospitalityadvisors.com. You can always email me at gary.isenberg@lwhadvisors.com. Feel free to call me as well at 212-300-6684, extension 108. Look forward to speaking to you or receiving your emails.
So here at the Hunter Investment Conference at the Marriott Marquis in Atlanta, I've had the opportunity to mix and mingle with a lot of people, and the one story I keep hearing over and over again is labor's costing more money, materials are costing more money, every single thing you could think about is costing more money because people are raising their prices and inflation is starting to outpace some of that demand and rate growth. Are you hearing that same thing?
I am, and you know what I'm also hearing, which is a great topic, that I've heard at this conference a number of times, is what we're starting to see the brands and also the brands and management companies as a whole focusing on is profitability.
Right.
The idea that we've got to find ways to maximize profitability has really become a topic of conversation. It's not only RevPAR anymore, it's profitability. And because of the rising wages and because of the lack of employees or labor force, the retention of employees is becoming very, very critical, because when you lose employees and you can't replace them, it becomes much more costly to find them for recruiting costs, and also the downward kind of service impact of not having the position.
That's right. Little factoid that I just learned. I'm preparing a new keynote speech to do. One of the factoids that I came across was the average cost of replacing an employee in hospitality and the entry-ish levels, $3,200+ when you figure in all those costs.
Wow.
And with 6% monthly turnover, that could put a serious dent into that profitability equation.
Yeah, it does a huge impact. And I think, what we're going to see in the not so distant future is really harnessing technology to help us. I think we talked about this before of, using robotics for potentially, putting together rooms and cleaning rooms and all that kind of stuff. And I think that's coming down the pike. But what I'm seeing is we're getting, again, as I mentioned in one of our previous podcasts, we're seeing a strong demand from owners of wanting to deep dive into their operations to identify, how do I increase my profitability? What's the low-hanging fruit? How can I consolidate things? How do I get better production and so forth? And there's some great software programs and companies out there, and I'm going to give a plug to one I met today. I think they've got a great product, is Hotel Effectiveness, where they can kind of measure productivity and things of that nature, and help you plan for the future, not only just looking at the rearview mirror, but looking forward, which is very important.
Right, and another company that I've seen is Purple Cloud Technologies, which is all about workflow and task management and all of that kind of stuff. Doing really simple things like figuring out a way to make the engineering guy be more efficient so he doesn't keep going back and up and down that elevator, which could waste hours at a time.
And and there's so many other things in talking about technology and data and information that's going to help us become more profitable. There's another company out there called Hotel HotStats. And HotStats takes profit and loss statements of all the corporate managed hotels of branded, and can give you real-time data and can kind of create a comp set. So, for example, this Marriott Marquis here at this location could compare itself to a Sheraton or Westin down the street or whatever on a profitability, which is similar to like how Star does, but it's looking at profitability. So I think we're going to continue to see a growth of all this type of data and access that's going to allow us to better measure our results and our performance.
And the thing that's fascinating to me is, I remember people saying, we learned all of these great lessons in the last downturn, and we've created all these efficiencies. It's amazing that we could do even more and more and more.
Well, the one thing you're missing, Glenn, is that what happens when you have 10 years or 8 years, whatever it is, of rising revenue.
I feel the fat's coming back.
Is you have an expense creep. It happens.
And we talked about that, I think, in the management contracts
right.
episode. That's the previous episode to this one that released. I highly suggest everyone go back and check that one out because it was absolutely fascinating. Here you really talk about that issue and breaking it down.
Yeah, and expense creep happens. It continues to grow and creep up over good revenue. So, but the point is you need to continuously look at that and kind of where can I get better performance, better productivity, maybe it's better pricing, whatever those things be. But I think what we're going to continue to see, whether it be data, whether it be software, whether other technologies, focusing on improving profitability. The idea of revenue management is going to happen to profitability.
And I see profitability on the customer side also as a new way of looking at it emerging. We used to just think about revenue per available room. I'm thinking it's going to turn into revenue per available customer and understanding the true value of a particular customer.
Well, I think it becomes even more so of bringing it down. It's profit per customer, right? Because at the end of the day, I can have all the revenue I want, but if I'm spending just as much money to service that customer as I am to get the revenue, I got no profit, and we're not a nonprofit organization.
Yeah, exactly. Because I think about it. I think you could put it this way: if you have one guest that's paying $129 for a room, or let's say $150 a room to keep the math a little bit easier, but doesn't do anything in the hotel, comes in, sleeps, and leaves, but you have someone that's paying $130 for that particular room, but spends a lot of money eating, drinking, doing et cetera, that can make them more profitable. And I think hoteliers could glean good insight on who those customers are and market more effectively towards those people.
So it's funny you say that again, and I'm sorry for giving out all these plugs. Maybe we should start sending some invoices.
I know. Nobody is profiting off of this podcast.
But again, Calibri Labs, they focus on looking at customer acquisition costs. And I think that's a critical point, is understanding segmentation of what it's costing you for that customer. Whether you're paying an OTA commission or you're paying the brand or who you're paying and what rate am I charging and what's the profitability of that customer based on acquiring them.
Right. So any other big issues that you saw here at the Hotels Conference?
I think it's very strategic purchasing and development opportunities, cautious optimism, and let's figure out ways to improve profitability. Profitability seems to be a key issue going forward.
Yeah, and I think the most important thing that I saw at this entire conference is less ties, more sneakers.
True, and I did not wear sneakers, and I'm actually wearing a tie today.
You are.
I think this is the third time this year. So yesterday I kind of bummed, and today I went with a tie. That's my new thing. One day one way, one day another. I want to confuse everybody.
I'm giggling because yesterday I wore jeans and a sport coat, and today I'm wearing the suit.
Perfect.
Excellent. So I got to tell you, this was a great event. People seemed, even with that cautious optimism, people seemed in a great mood. It seemed like a really fun, clubby atmosphere over here. And I'm looking forward to seeing what's going to happen by the time we get to our mid-year checkup at NYU.
We'll see you then, Glenn. Who knows? Hopefully we're still being cautiously optimistic or maybe even aggressively optimistic. We'll see.
I'm hoping we get to the...
Hope we're not crying.
Well, I usually cry most of the time, but it has nothing to do with the state of the hotel industry. Gary, before we wrap up, how can we find you?
You can always find me at LWHospitalityadvisors.com. That's our website. You can also email me at Gary at LWHadvisors.com. Excuse me. All these names and acronyms, I get a little confused sometimes.
I forget who I am from time to time. But that's more on purpose.
Yeah. So it's Gary.Isenberg at LWHadvisors.com, in case I said it 4 different ways before.
Excellent. I am, of course, Glenn Haussman. You can find me on social media at Traveling Glenn or at the No Vacancy News Network. Make sure, if you haven't subscribed to the Business of Hotels podcast, do it right now.
Please do.
You can find it on Gary Eisenberg's website at LWHadvisors.com.
LWHospitalityadvisors.com.
Okay.
That's the website.
All right, that's the website. It's all very confusing, but hopefully not for you guys.
It's been a long 2 days of what I call convention burn. At this point in time, we're kind of like...
Yeah.
Mumbling fumbling over our words and drooling
not to one up you, but this is my second conference this week.
All right, you did one me up.
Well, but you're getting to go to a lot of cool places yourself, especially tonight.
Yes, yeah, we'll be at Johnny's Hideaway if anyone wants to join us. See you there.
Which won't work because when you hear this, he's not going to be there. He's already 5 cities away from here. So thanks for listening. We'll see you next time in the Business of Hotels podcast.